Let's bring in Barry Oxford, analyst at Davidson, who's been critical of WeWork. Published a note last week when the company was supposed to go on the road ahead of its IPO. Pretty critical note. How much of your sort of bear thesis had to do with leadership and Adam Neumann?
Well, first off, Adam did build something, so let's not lose sight of that. And there is demand for the WeWork space. So, and once they're kind of up and running, and after about 18 to 24 months, they are profitable as a standalone unit. Now, that being said, where the critics really come in and where I stand, and I stand with the critics on this, is that S1 document and the corporate governance slanted so much in his favor. Yes, I realize he can file as a insider corporation, but you could still choose to have an independent board and an independent compensation structure, which I think is desperately needed.
I mean, clearly they already made some suggested changes to the S1 even before the IPO was pulled. And if they now were also to change the CEO and some of the other board structures, would you change your view and be bullish, or does it need other things to change as well?
I mean, I think that's a start in the right direction, Wilfred. Again, we also have to bring valuation in on top of that. Okay, how much are we still talking about paying for the company? But I think if we brought in a seasoned CEO, I think that would help a lot of us Wall Street analysts saying, okay, we got somebody at the helm who has and is able to run a corporation.
On the topic of valuation, I mean, with things like Uber and Lyft, a lot of the discussion point was no one like this is public already. There's no other comparables. With WeWork, you actually think that's slightly different, that Regus is out there and it highlights a drastic divide in terms of valuation.
Sure, correct. When you look at the multiple, I did kind of a net operating income, not a net income, because you're dealing with negative numbers when it comes to WeWork. So I look at the net operating income of both Regus and then Boston Properties. And if I give these guys a multiple in between the two, because, let's go ahead and give WeWork maybe a little benefit of the doubt because they've got a much higher growth rate than Regus. Okay. That's fine, but I don't think they deserve a Boston Properties type of multiple either. So you put them in between, I get to somewhere between $8 to $10 billion.
What would it take for Mark to buy this IPO?
I'm not buying it. No way. So I've got an issue with the business model in general, right? So you've got a company that's signing all of these long-term leases,
yes,
and then they're subleasing to little, small businesses, maybe one employee kind of companies on very short-term leases. So since 2010, I think it's worked because the economy's been growing. Should the economy start to take a turn down, those are going to be the kind of businesses that aren't going to be able to make their financial commitments and pay their leases. I mean, they've got $47 billion of lease obligations right now and only commitments of $4 billion coming in. So that's my big issue with this kind of a company.
And then we've heard that numerous times from other investors. What would happen to this company in a slowdown?
Well, I mean, if we look at what happened to Regus back in 2008, they went, I think, from about 140 million in profits all the way down to about 20 million. So they really got socked. So Mark, you are correct. If the wind comes into their face with a recession, and the amount of money that they're burning right now, I mean, I don't want to say anything so drastic, but this company's going to start to teeter for sure.
Tough, yeah.
On that point, though, Barry, you've looked at the cash burn and the current cash balance. How long have they got left if there is no other source of funding that comes through? Likely that there would be, but if there wasn't?
Oh, well, if there's not, I mean, I don't even think that they could complete what they have in progress, never mind, sign another lease and start with the tenant improvements that are needed.
And you think any fundraising that they do secure should be in the 8 to 10 billion range from here?
Yeah, I mean, I think they're going to need every bit of the IPO money and the $6 billion line of credit from J.P. Morgan and Goldman Sachs.
You think ultimately they'll pull it off if he exits an IPO?
I think it's got a much better chance if we change the corporate governance and we get a new CEO in at the head who has CEO experience. And then, to Mark's point, we got to keep the debt level low because they've already got enough obligations. So if the wind comes into their face, we got to keep their lease at the bare bones minimum needs to keep to the lease obligations, not have debt obligations on top of that.